Thank you so much, Swaroop, for being here today, and privileged that for your very small stint to be in Hyderabad, you're here and you have taken some time to be in Bauer. Right? I'll make the conversation very candid, but before we go there, I wanted to know: do you love to build companies or to invest companies?
I think I look at my career as going through three phases. The first phase was when I was an entrepreneur and I helped start a couple of companies, operating companies, and then I became a venture capitalist, but I was investing in companies. And then I left my venture firm and started a new one. So it's sort of the culmination of, a entrepreneurial VC. That's kind of how I look at myself. So it resonates. The theme of entrepreneurship resonates with me. In fact, I was thinking to myself as to what I'd like to share with all of you. When I think about entrepreneurship, I try to define it in the following way. I define entrepreneurship as a passionate rage against the status quo. So if you are really pissed off with something that's not working, right? And you say, okay, I've got to solve this. That's sort of the genesis of entrepreneurship. But it's got to be where your solutions got to work for many other people. That's the leverage, that's the scale, right? Because if you solve it for yourself, it's not a very big market. And if you have to solve it for each customer differently, that's not scalable either, right? Yeah. So it really comes down to identifying a problem, a large enough problem and a large enough market, and solving it by building once but selling multiple times. That's sort of the essence of what entrepreneurship is. Yeah. At least in my opinion.
Very well said. Also, when you are probably, I'll open up to the rest of the folks, but before that, in your span, what kind of phases that you went through while investing? I mean, did your thesis evolve from your first venture to the kind of, the number of ventures that you have invested in?
Yeah, so, if you think about, I've been associated with many startups, both on the founding side and also on the investing side. In the life of a startup, it is not a little bit about product market fit. It is all about product market fit, right? And so, but the interesting thing is when people think about product market fit, you can recognize product market fit when somebody has it, right? When you're sitting by the fax machine and the POs are coming in, when a company has product market fit. What people don't ever teach you in any business school is how do you discover product market fit? What I'll share with you, and this is sort of the lessons I've learned over the years, both as a venture capitalist and as an entrepreneur myself, is here's how I define product market fit. I define product market fit as discovering the non-obvious insight into why it would be criminal for a customer not to have your product. I've chosen those words very carefully, right? I use the word discover. It is not a search, because search means you know what you're looking for. A lot of times what you'll find is you will discover product market fit in the most unlikeliest of places. That is, you might say, I'm going to design this to go solve this problem, and turns out that it actually helps solve a completely different problem. So I'll tell you, my own story. Circa 2000, late 2000, early 2001. I had just left my first startup. I retired from my first startup. We'd taken it public. And I got tired of the healthcare industry. And I said, I want to get back to my technology roots. And I took a little time off. And during that time, there were these 4 guys who used to work for me at WebMD, who came to me and they said, hey, we'd like to show you what we're doing and get your feedback on it. So I went over to one of their homes and they gave me a demo of what they were building. And what they were building was an anonymizer website. Okay, so what's an anonymizer website? You could go, so today, how many of you use Google Incognito? Everyone, right? So it basically, that's what anonymizer websites were. This would be pre-Google Incognito. So that is, you could go to this website and you could then traverse any other website in the world, but that website wouldn't know where your query was coming from, in a nutshell. So they showed it to me, and this is, over 25 years ago. And I said, very cool technology. I don't know how you build a business on this, because remember, this is 2000. Actually, you probably can't even remember. Some of you are probably not even born then. But it was the internet bubble had just burst. And so it was kind of the nuclear winter. So free was not cheap enough. Okay, you could not get any advertising revenue, nothing. So I was like, how do you build a business around an anonymizer website? Because consumers will use it, but nobody's going to pay for it. So what we did was, I remember one of the guys said, we could convert this into a security appliance. And I heard that and I said, Sharon, what did you say? Could you repeat that again? He said, we could put the same technology into an appliance, into a box, and put it at the edge of the network, and it acts as a proxy, and you could now access all the web applications inside the enterprise. I'm like, wow, bingo, that's what we should go do. So that was the genesis of Neoteris. So this anonymizer website company became Neoteris. It was just a pivot into a completely different market. A B2C company became a B2B company, right? So that's what I mean by discovering product market fit. Then I said non-obvious insight, right? Why I use non-obvious insight is if it was obvious, somebody's already doing it, right? You have to figure out that non-obvious insight is typically tied to some kind of a tectonic shift, some trend that is emerging that you have sniffed out and the rest of the world hasn't yet figured it out. That's when you are right and everyone else is wrong. I use this interesting 2x2. Imagine there is failure success on the horizontal axis, and on the vertical axis it's obvious non-obvious. All right, if you start a company or you invest in a company that is an obvious investment but it fails, people are going to say, oh, bad luck. If you make an obvious investment that succeeds, people are going to say, congratulations, but main bhi karta. All right? If you make a non-obvious investment that fails, people are going to say, I fucking told you not to do it. Right? You make a non-obvious investment that works, now you are right. That is what, as entrepreneurs, you guys have to strive for, is sniffing out that non-obvious insight, because you have to leverage a first mover advantage and convert that first mover advantage into a moat, right? So that you can convert what I call a comparative advantage into a competitive advantage, right? Comparative advantage is time bound. Competitive advantage is much more sustainable, all right? So, discovering non-obvious insight, which is tied to this secular trend, okay, where it would be criminal for the customer not to have your product. In nice to have, not good enough. It's got to be where the customer says, I've got a hair and fire problem, I'm going to pull it out of your hand. That is what product market fit is. So, in the better part of the last 3.5 decades, this has been the purpose of my life. It is to figure out, initially for myself, how to discover product market fit, but subsequently how to teach my entrepreneurs how to discover product market fit. I actually co-led the India practice. So we invested close to 400 billion into companies in India, right? But at that time, the IPO market was not an option for startups, right? And so you were basically, the only liquidity option was selling to some other company. And that's never a good thing for startups, because if all your option is to sell to some larger company, it becomes a buyer's market. And Indian buyers are very cheap in general, so they're not going to pay a lot of money for. So competition is a good thing. Now, if I fast forward now, the IPO market is a viable option for a lot of companies, which helps with diversifying liquidity options, diversifying and injecting some amount of competition. I remember back when we were investing in India, the average Indian engineer wanted instant gratification. So every 3 months they wanted a 20% raise, all right? And startups couldn't afford 20% raise. So we had to deal with a lot of churn. That has started to change. That is, now the average engineer, individual contributor, realizes that, there's a pot of gold if I stick with a company long enough. And so that's a good thing. Now, what's not helped our ecosystem here is the dollar to INR. The currency has depreciated quite a bit. It hurts when we have to attract FDI, foreign direct investment, all right? And because, a lot of venture firms here, they raise capital from limited partners abroad.
Yeah.
And when limited partners think about, investing in funds in India, they have to worry about this. It's like, okay, I invest. So we got hit pretty badly when we were investing in India. When we invested in India, it was 45 rupees to a dollar, all right? And we were investing in dollars, and we had a Mauritius entity, so to avoid double taxation and things like that. Now it's like freaking, it starts going up 75 rupees to a dollar, 80 rupees, now it's 90 rupees to a dollar. So that hurts in terms of attracting foreign direct investment, FDI dollars. It's never been easier to teach yourself something than it is today. Right? If you just think about the abundance of resources available to you, okay, to teach yourself some new skill, it's never been easier. It's just unreal. I'll be on a Zoom call with an entrepreneur who is doing something in, biopharma, okay? I don't have biopharma experience, right? I'm dangerous, but I'm nowhere near an expert. But in real time, I'm pulling up ChatGPT or Gemini and asking it some questions and getting intelligent very quickly. So what I would say is this, that is, I've always believed that an undergraduate program is the new high school diploma, right? There was a time when if you got a high school diploma, I'm talking about the US, you were pretty much guaranteed a job. Not anymore. The undergraduate program is that high school diploma today. You're not guaranteed still, but it teaches you how to teach yourself. You learn how to teach yourself, right? And so the skills that I think are really important are intellectual curiosity. So, and that's, you got to be curious about teaching yourself something that you don't know much about. So when you guys think about entrepreneurship and you say, okay, I'm going to build something, you probably start off with very little knowledge about what you're trying. I talk about a passionate rage against status quo, right? Okay, so you felt this passionate rage. But do you say, okay, how do I need to solve this? There are certain skills that you're going to have to pick up. That will require a certain amount of intellectual curiosity and immersing yourself in specific skill areas so you become an expert. Some of the best entrepreneurs, best CEOs that I've worked with are ones that have developed an intuitive feel for the business they're building. And that intuitive feel only comes when you become an expert in that area, right? So you have to strive to be an expert in that area. And so without that intellectual curiosity, you're never going to get there, right? Second thing that I think is important is intellectual honesty. What I mean by that is don't fool yourself, right? As entrepreneurs, your job is to convince everyone that the Kool-Aid you're making is the best Kool-Aid in the whole world. You just cannot afford to drink it yourself. सभी को पिलानी है लेकिन खुद नहीं पीना. That's the second thing. And the third thing that I'd say is important is confident humility. What do I mean by that? Confidence that you're no worse than anyone else, humble that you're no better than anyone else. These are the three things that I'd say are life lessons that I talked about. Product market fit, right? This is not taught formally, okay? And so that's one thing that I'd like to see business schools teach. Second thing that is not taught formally in a lot of business schools is leadership, right? I mean, I can talk at length about what's the difference between leadership and management. Leadership is about change. Management is about efficacy. Leadership is about influence. Management is about control, right? Leadership is about breaking the status quo. Management is about making the status quo more efficient. So people often mistake leadership for management. It's not, right? And you want to have both skills ideally, but Osama bin Laden was a tremendous leader. He got 20 people to kill themselves, right? So that's what I mean, right? There is a inspirational aspect to it. If you go to our website, there's an article I've written about the 4 styles of leadership, right? And read it, and if you have any questions after that, feel free to reach out to me on LinkedIn. I'm happy to answer that. So these are some of the things that I feel are lacking in B schools. When you think about what are the skills it takes to succeed as a venture capitalist, they're basically 5 skills. Sarita, right, is your name? First is deal sourcing, finding deals, okay? Find the deal to invest in. Second is evaluation, evaluate the deal, right? And third is winning the deal. Fourth is helping the company. And fifth is liquidity, finding a home for the company, whether that's a public market or whether that's having it bought by some other company. These are 5 skills you need okay? So when I entered the venture industry, I had interviewed a whole bunch of people, I think about 25, 30 VCs who had been successful. Like I should say, what is it that made them successful? And this was the essence of what it. So then I said to myself, okay, how do I score on these? And I said, finding deals wasn't a problem because I went to an IIT and I was very well connected to the IIT network in the US. So there was a lot of IIT deal flow that was coming my way, even before I became a VC. Second was evaluating it. I felt I had a nose for it, but that was a skill that I felt I had to hone and I had to learn from others. But there's a portion of that skill that's your own. That's your originality, right? And it goes back to, how do you think, how do you evaluate, how do you, what kind of economic rationality do you bring to it, right? And things like that. And, when you cut your losses and, all of that. So that's something I felt like I had to learn, and so I'm still learning. Third is winning the deal. Here again, being an entrepreneur helped me. Going back to the question he asked me, right? It's because, a lot of times I had entrepreneurs take my term sheet over others just because they were like, I'm going to be price insensitive. I'd rather have you involved with my company. And then the fourth was helping the company. Here again, having been in that person's shoes helped me. Now, the thing though is, you have to, you're not running the company. You're there as an advisor consultant. And the way that I like to think of the role that I played as a VC or as a board member my role was, from a governance point of view, the CEO reported into the board, but I worked for the CEO, right? So I was like, how do I make your job as easy as possible? And so that's the job. A lot of VCs today think that their job is to attend board meetings. The actual work of a VC is in between board meetings. Is how do you help these companies with finding their first design partners, attracting talent to the company, then finding partners that they can take their product to market with. These are the sorts of things. And that's where my operating experience helped me, because I had a fairly large network within the CXO network within the US. So,
Sure. Thank you so much, Swaroop, for